This conference will now be recorded.
Hi, recording is up and running, and as always, everything that we talk about is for educational purposes only. Nothing is intended as any type of investment advice. So let's talk about Facebook. All right. So I understand, you know what, it's not at this point, to be honest, is anyone shocked? We talked about yesterday in our Traders Exchange. It's on recording, and if anyone hasn't seen it, and Donna had just posted up, we said the number 170. I mean, I don't understand what anyone's worried about or shocked about. Okay, the stock is pulling up right now, but one thing that we have to look at is look at the volume that it's pulling up from. It's absolute nonsense. The stock is in consolidation, and it's moving in consolidation. I put this picture out here for our print line. Okay, we know for a fact that we have our selling. Yesterday at 161.50, we had huge selling that was going into it. Guess what? Stocks pull up. Did I expect this much of a pull up? Yes, I actually did, because the number that we talked about yesterday in Traders Exchange is basically telling us that this line right here, as we get closer to lines, what happens is they act as magnets. All right, so we have some good prints that came in at that 169 level. 170 is the next mark. We even at 168 had some good buying that came in right about here that showed it was going to pull back and it was going to continue back up. You have to follow the prints. You can't take something that's said and not pay attention to what it is. All right, so yes, under 160 is what the prints are saying, but if we keep getting selling and continuation of a pull-up, it's going to happen. So, you know, this is the answer. I'm not going to repeat myself one more time, all right, in the chat and stuff. You know, if you're and not in the meeting, I'm going to post this meeting as we're done. But this is not anything that we didn't expect to happen. You're getting a pull-up. It's very simple. We're sitting in a consolidation. So let me just talk about this for a second, because I know a lot of you might not understand what this is. This is just a trend line. So what the trend line shows you is that when you have lower highs, what happens is all you do is you draw a line down from those lower highs. A lot of people follow this very religiously, and it's almost like a self-fulfilling prophecy because of the fact that so many people follow it. You know, at these certain points, you're going to see market makers react. You're also going to see retail traders react to them. So as of right this second, okay, it hasn't even hit our line yet. Okay, and it was posted in the chat room before, so we haven't even hit this line yet. So what we would expect is just like we did, you know, coming back down towards that 170, pulling back up to that same line, pulling back down to under 160, hitting our first price target of 158, and don't forget that part of it. So we hit our price target of 158. The stock ends up pulling back up, but we got great selling underneath it. Remember, the prints aren't going to lie. Okay, your time frame might be off. That doesn't mean the stock is off. The stock is not due to fall back down. It's due to fall back down overall. There's no time frame that comes back into there. So my biggest suggestion for pretty much anyone that's finding themselves on the wrong side of timing within trades is to make sure you watch the videos. If you have not been since I've been in, or you know, if you're new here, this does not apply to you whatsoever. But if you've been here since I've been here and you haven't watched at least 50 of my videos, I mean, we're talking about months and months and months now. Okay, since we've kind of merged and came to ATC, then that just means you're lazy. Okay, and you know what? It's good. You have to understand how to trade. Coming in at 160 when the price target's 158 after it hits 158 is not a smart trade. Taking a trade in consolidation at the bottom of a consolidation is not a smart trade. And I know we talked about this a lot in yesterday's Traders Exchange. So I know I'm repeating myself. And one of the things I hate more than anything is having to repeat myself. Okay, but we talked, and even Richard put it out there in the chat room today. We talked about yesterday, 170 would be the logical number for this thing to come back up to. And if you take a look, it's not rocket science. It's just the trend line comes pretty much right to this 170 line. I mean, that would be the number, the most logical number for us to look out there and for it to hit. Okay, so this isn't going to be the first time. It's not going to be the last time. The stock is not it's doing what it's supposed to. Okay, overall, a price target is one thing, but do you guys remember the hours that I've spent in Traders Exchange going over the expectations of what happens first before a stock comes to our price target? Guys, what happens if we get more selling as the stock is going up? We get some more selling and then we get buying as that happens. What's going to happen? Okay, the pull-up's going to be extended, right? And we're going to see that extended pull-up come back up. One thing you want to look at, though, look at the volume. We have a $5 move. On average, it trades $3.89, and our volume is lower than what it typically ever gets to. Okay, what does that tell us? When a move comes like this and volume's that low, what does that tell us? And we've seen this over and over and over. Yeah, the move's not sustainable. Remember, you think that many people came in and sold at 161.50 yesterday and that they're not going to make their money? Anyone think that? Why in the world would you sell a stock? What's the only reason ever to come in and sell a stock? This would be a great spot to anticipate a trigger coming back up towards those prints at 169, by the way. Okay, right here. So if anyone's looking for a trade, I would certainly pay attention to what happens right here. Yeah, well, we come in a hollow move, but the only reason to sell a stock is because it's not going up anymore, or you're building a big position. In that case, you're not selling a stock. What you're doing is you're shorting a stock. We know where the prints are. We know what's supposed to happen. So if you're trading something over a period of time, you can't cry when the stock is going to move. It's just, you know what, it is what it is. So I still have no change whatsoever in my thought process of where this stock goes. The selling at 161.50 at a minimum tells us we're going back down to 160. So guess what? Okay, after we're done with this whole pull up, all right, and we still have prints at 169. So even though the stock is starting to come back down, if you take any type of short trade as of right this second for an extended period of time, I promise you're going to go in the red. And when I say promise, obviously anything could happen, but to a very, very high percentage, you will be losing, and you'll be very upset as you watch the stock go back up towards that 170 point. The prints are there that tell us that's what's going to happen. All right, just because there's an extended pullback does not mean that the people are not going to make money anymore. It doesn't work that way. We talked about AMRN, which we'll go into right now. AMRN is a perfect example as well. We know for a fact. Well, see, that's the thing, Jason, is that by taking one thing that's said in a chat room for a long-term trade in a day trade channel, you're setting yourself up. If you don't pay attention and you're not looking at it, you're setting yourself up for failure. I do these meetings, guys, not for myself. As much as I love to hear myself talk, all right, I do these for you guys so I can give you exactly what my expectations of what I'm looking for. I know how to trade. At the end of the day, I don't need the meetings. I don't need to talk it out. I already know what I'm going to say before it actually happens. It's all based off the prints. So we know. I hear your voice when I've slept. I've been watching. And I'm telling you, you know what? I literally do this for you guys. That's what it comes down to. So when you take a piece, keep in mind, guys, if we go back, did Facebook hit my price target of 158? Yes or no? And we've already talked about this. It was in the pre-market, but it hit 158. That was our price target. So it's already hit it. Now, keep in mind, if you did not pay attention in that moment and you did not get out of your trade in our price target, you got lucky and it showed us great selling that came in again. So now I think it was 158.25, Derek. I don't think it hit 158 completely, but you know what? 158.25, I'll take that as being correct. Within 25 cents of a huge move, because the original trade actually started right under 165. So one thing that we have to understand is that it was within 25 cents. So essentially it hit our price target. So if you didn't get out, you got lucky and we got more selling. But what does a lot of selling bring, guys? If we have a huge amount of selling, and everyone that's been in my class before, a huge amount of selling, what does that tell us is going to happen? And Mike, I'll get to that in a second. Not only a pull-up, but a huge amount of selling tells us what about the pull-up that we could expect. Yeah, it's going to be big. Facebook on average trades $3.89 a day. So over the course of 3 days, is a $10 move in the scheme of things really a big deal? And I'm not upset whatsoever. First of all, I'm not short Facebook right now because I'm day trading. But is it really that big of a move? No, it's just a 3-day move. If you have 3 up days, okay, in a stock that trades $3.89, you're talking about just under $12. That's what 3 up days means. It's that simple. It's not a big deal. Okay, what happens if Facebook tomorrow comes in and starts trading 80 million shares? How much do you think Facebook could move in 1 day? Everything is relative in what we look. Yeah, well, I mean, exactly. We're not even, well, technically, if it, 80 million shares, we could see this thing go down in a second, and it's going to eventually fall below that. I don't care what the value is. I don't care what the news is. I could care less about anything else. We know the prints that we saw. Okay, 100 yesterday, 161.50 was hit 4 or 5 times with bursts of sell prints. So we know the more a stock gets hit at a level, what does that mean for our pull-up? What does that tell us about a pull-up the more times it gets hit at a level? Oh, it's going to be bigger, right? It's extended. So is there anything in Facebook that Facebook is just doing something that's showing us it shouldn't? Is there any surprises in Facebook right now? It's following the rules. So making a bad trade, being upset about making a bad trade is not, it's a learning process. You learn from it. But Facebook isn't the problem. Facebook's doing nothing wrong. So don't get me wrong. Sometimes, like AMRN, we'll have a stock that just runs, dollars and dollars and dollars and dollars and dollars that it shouldn't. Okay, but Facebook, it told us exactly what was going to happen. We talked about this yesterday. We knew the stock, the number was, I said, I wouldn't be surprised if it got to 170 based off what we were seeing. It hasn't hit 170 yet, but I bet you it does. Okay, so I wouldn't be comfortable taking a trade in this to the short side until it comes back up above 169 where we have those aspirants and then comes back down. Now would be a great time to start paying attention to a short trade. Okay, if the price started, the trade started at 165. Let's just think about this. I just want you guys to start thinking logically because some of the trades I see, guys, that are out there, and I'm not, no one in specific whatsoever, but sometimes I see a trade, and I'm not an options trader, but it kind of makes me cringe. And the reason behind that is it's just, if you know it has to pull up first and you take a trade to a short side, you're gonna be in the red. It's gonna happen. So you're gonna be very stressed until it ends up actually happening. Facebook does a lot wrong. This pull up just isn't one of them, and that's what it comes down to. So right now, to take a short trade in Facebook or average down would be crazy. But when we get back up to 170, that would be a great spot to look. So let's go back to, we talked about this in class, and we hit this hard in class. What is the highest probability within a move of a stock? It's the first trade, right? Did we not talk about this over and over again? Okay, so if you're looking, the highest probability is going to be the trade that comes, for the first trade that comes, because then it's going to go furthest away from that original trade. Okay, and then the rest that happens, you don't have to really kind of worry as much. Okay, the trade was under 165. That's where it started. That our price target became 158 because of the amount of selling that we saw at 160. It happened. Pre-market went to 158.25. So you understand? So even if you were in the trade afterwards, if we just, every level, we keep getting selling as a stock goes up. A stock goes up, we keep getting selling. What does that mean is going to happen to the stock overall? And I know this is like a little mini lesson, but you know what? It has to be said. Well, it's going to eventually come down. But if we continue at every level, we get selling, what's going to happen to the pull-up? So it's going to pull up. And then we get huge selling again, guys. What's going to happen there? It's going to pull up. And then we get huge selling again. It's going to pull up. It's going to extend what we see. What happens if we see some selling on a level? Let's say in this case, let's say at 169, we get some a bunch of selling that comes into it, but some ask prints right afterwards. What is that telling us? So more selling than buying. What is that telling us is going to happen? Someone's going to ride the pull-up. Yes, not only is it going to pull up, but somebody's going to make money on it. Remember, if you know a stock's got to pull up, in this case right now, I mean, we're talking about 160, 150. We're almost at 170. We're about $8.50 towards that 170 point. If you know it's going to go up, people are going to buy. It's going to happen. You'd be crazy not to. Market makers know exactly what's going to happen. They're going to make money on it. But you cannot blame a stock that's doing exactly what it tells you it's going to do. It's that simple. We all want to make money and make sure our trades are correct, but sometimes you take a trade at a bad point. If the trade starts at 165 for the short, so under 165, and the price target's 158, is taking the trade at 160 a very high probability? Because what do we know about 160? Is 160 going to be an easy number to break below and hold, or is it going to be a hard number? And there we go, Tracy. It's a psychological level, so it's going to be very hard to hold. So taking a trade right above 160, does that give us a high probability, even though the stock has to fall down? This is the mindset. You have to start thinking this way, because if you don't start thinking this way, what's going to happen is you're going to take shitty trades. And when I say a shitty trade, it doesn't mean that a price target is one thing, but it's expectations from that price target. Okay, I stay up at night sometimes giving you guys and thinking of things for the videos that we do in Traders Exchange. Okay, I stay up to thinking of the things that we do in classes. Okay, if you look in the profits and loss, some of the people in our class, our classes are killing it, especially yesterday, killing it. And guess what? That doesn't just come from taking a guess or something that we saw that that goes on out there. Okay, if you look at what Day did after these week's classes, it's following the right things. And there's certain triggers, there's certain points that show you to take a trade. Now, if nothing's happening, you don't get any trigger, you don't get anything that's going on, is taking a trade just because the price target at 158 a smart thing? Baby plus thinking there's no sleep. Tracy, I haven't slept since she's been born. I've given up on stuff. No, you have to have a reason. Just because the price target is something doesn't mean you just take it. Hey, the stock will eventually get there, but it doesn't tell you that it's time to actually get in. And if you're having problems on stocks that a lot of people are making money on or doing exactly what they're supposed to do, but you find yourself not making money, you have to take a look at what's going on. And the perfect example that I want to go over now. So Facebook, we've already, I can't analyze that any more than I did. So the Cron, guys, did Cron hit our price target today? It didn't hit 11? And then some, right? But did Cron do it immediately? Or did it show us it had to pull up first and then come back down? Pull up, then come back down, but it had to fulfill the prints, right? Took a while, but that's the funny part. It didn't take a while. It took as long as it told us it was going to take. When we get a huge amount of selling, guys, what does that mean for the pull-up? Rich, I can sense your frustration and the shame you have to harp on things repeatedly, but thank you for putting the time. And that's it. I don't mind putting the time. It's just I'm not frustrated with any of you. You got to remember, none of you pay my bills. I pay my bills. And guess what? I'm never going to pay your bills. It's just not going to happen. I can teach you how to pay your bills. So I'm not frustrated with you at all. What I'm frustrated is I hate seeing people lose money on things that there's just no reason for. The whole reason we do this here at Head of the Charts is because I want you all to make money. But when I say something and then you just go against it, or we have a price target. Remember, what's a price target? And we'll go over this again. What's a price target? Why do we have a price target? What's the reason for it? Okay, stupid question. I'm not getting any answers because I feel like everyone. That's the anticipated move. And Steve, that's the perfect answer. The amount of money a market maker expects to make on the trade. And that's the best answer you can have, because we're following smart money. So if we're following smart money, what that's telling us is that smart money is looking to make this amount. Okay, just because we want to make more money, is that ever going to happen? We get out because if the market maker doesn't show us they're going to make more money, we're not going to make more money. It's either going to go into consolidation or it's going to go back the opposite way. Only two situations that could happen. All right. So when we hit 158.25 and people weren't paying attention, if you didn't know it hit 158.25, now I don't want to say it's baffling because you know what, I've missed things before, but if you're in a trade, you got to pay attention. So it hit where we went, and then the selling out on its way back up, that was a whole different story. That was a luck thing. So if you didn't get out of your trade, the fact that you got all that new selling in, it tells you eventually you're going to be right. But if you were trading options, okay, is eventually a good number? Can anyone put a number to eventually? No, unfortunately not. Unless you have leaps over a year, which I can promise you within the next year, and by promise, I don't mean promise, but I do mean up to a very, very high percentage that within the next year, Facebook will go underneath. But you can't put a number on prints that came up and keep showing you has to pull back. Guys, when we come back up above 169 in Facebook, anyone here know for a fact, okay, that at 170 it's going to stop? Does anyone know that here? Anyone know we're not going to get prints at 169.50 or 170 or 171 or 172 or 173? No, we have no idea, because we do know that it eventually is coming back below 161.50 and it should go back down to 158 underneath 160. But we don't know when they're going to allow that. Last time Facebook printed at 170, it pulled up $20. And you know what? We have to understand this. So we can only go based off of what we see. Does this make sense to everybody? Does anyone have any questions? Because this isn't the first time it's happened. Okay, just because guess what? I'm not short Facebook. I never told any one of you that I'm short Facebook. I just told you where it has to go. It hit where it had to go, and now it's been going up on nonsense. And when I say not, literally, it's been going up on nonsense. Nothing that I believe in whatsoever, because I know what the prints are at that 161.50. But at the same time, I don't know when it's going to stop. I just know eventually it's going to go back down under there. So as a day trader, the story for that shows me I'm going to have some really high probability shorts based off what I see going on out there. I've been way so Rich. What's the furthest pull-up extended move you've ever seen in a stock? Have you seen stock extend up for multiple weeks? Absolutely, Jesse. Especially cheaper stocks. I've seen a lot of cheaper stocks extend up for, I've seen it for a month. Now, not a straight month of just straight up. That's never happened before. Oh, that I recall, or a stock that I've been watching on. But I've seen them extend up 10, 20. First of all, you want to talk about an extended pull-up? Let's talk about TLRY. It actually followed the print, so it was an extended pull-up. But guess what? There were sell prints that came into that thing, and it went from what, 250 to 300? That was a $50 pull-up. $50 from 250 to 300. That's a lot of money when you think about it. Well, no, you don't even have to think about it. It's $50 that the stock moved. Everyone, you guys are too zoomed in. That might be a big problem. That's a big problem of a lot of people instead of coming out and being able to see the whole picture. Okay, guys, I think I'm done with it. And it's not a rant. I just want to teach you. I don't want to see people lose money for no reason. It's just, it bothers me because the rules that I've put out in place would have stopped it in the first place. We talked about yesterday having stop losses and mental amounts that we're looking, how much we're looking to make compared to how much we're willing to lose. We talked about all these things, and these things would stop all and I don't want to say stupid mistakes, but they're stupid mistakes, because if you know something has to happen and you let it happen, it's a stupid mistake. Buying exceeds selling over an extended period of time. Does it reach a point where a price target is canceled out? I feel like the answer is no, but why? Because eventually okay, so this is the number one thing that you always have to remember. And I'm going to tell you one thing. During our classes, I go over this stuff, in spades. It's just, I'm going to tell you, market makers are always going to be right. It's that simple. Okay, so if you see big prints, that market maker needs to make their money. That simple. Doesn't change. That is the number one rule and basis that we base this entire methodology off, is the market maker is going to be correct. If the market maker in Facebook isn't going to be correct, they're not a market maker anymore. You can't be right. You can't be wrong a certain amount of times. And keep in mind, we've seen Facebook going up, and the volume really it hasn't been anything. Yesterday, we didn't get big ask prints. When a stock makes a $9 move, I promise you that when it's supposed to make that $9 move, you're going to see a giant amount of ask prints. Did we see that yesterday? At any point yesterday, did we see a huge amount of ask prints come in? No. Did we see that today? Yeah, 169, we have about 4 or 5. At 166, we had about 4 or 5. That's not enough. If this stock was going to 185, how many ask prints do you think you'd see at these major levels? You think it'll be 4 or 5? That's all they care about? So they know the stock's going to jump up another, over $15. Exactly, Vince. And Vince has been here for a long time. You wouldn't be able to fit all of them on your actual time and sales if you scrolled it up all the way to the top of your screen. Okay, I've been doing this for a long time. This right here, when people are upset about it, it bothers me, because if they're upset, it means I'm not doing my job. It means that because we literally, first of all, it doesn't mean I'm not doing my job. But yesterday we said it's got 170. Is the logical spot that this thing would go up to before it would come back down. And it's very simple for the reason why. So you have to pay attention. I'm going to end it on this. If you don't want to put the work in, you won't have to, because your money will be gone. And you know what? It's a blunt statement, but guess what? It's the truth. If you don't want to put the work in, and you don't want to study, you don't want to pay attention, you won't have to, because your money will literally be gone and you won't trade anymore. It's that simple. All right, guys. All right, so let's talk about a few other things now that we're done with, the whole, I don't even know what we're going to call it, but you know what? At the end of the day, I know there's a lot to learn from what I just said. I don't just speak to hear myself speak. It's reason, the reason behind it. When you make a stupid trade, I promise you, I've made tons and tons of stupid trades. That was a come to Jesus meeting, as my mom would call it. But I've made tons and tons of stupid trades. But guess what? I get rid of them and I learn from them. If you keep making the same type of stupid trade and you don't learn from it, I'm probably going to be the one that ends up taking your money. And not from anything, but if you're trading shares, I'm going to end up taking your money from you. because everything works in a certain way. I promise you, if you're watching what I'm watching and you keep doing stupid things, you're going to buy or sell for me or sell to me. Is going to happen. All right, guys. Okay, so work at it. Okay, any career in the world, it does. You know what's crazy? It's another thing that bothers me too is that for a year to watch a year and for a straight year to watch recordings over and over and over again, it's not even that much work. It's it's hours and hours and hours. Don't get me wrong, but for a year to get a job or or have a career that you're able to be able to do this and be able to trade stocks, and not only be able to trade stocks, but no one can fire you. You're never going to get laid off. The economy, the only thing that the economy affects is the fact of you might not get as many trades, but you're still going to have high probability trades. There's no better job in the world. So put the freaking work in. It's that simple. Be humble, learn first, and make money. Can't disagree with you. All right, so let's talk about Kron. So Kron's pulling up right now. It just got some good prints at 1150. Okay, overall, the amount of selling that we saw come into that 12 level, I'm okay with where it went, but there was a lot more selling that went in at 11. So the selling at 11 is telling me right now that the thing needs to pull up a bunch. Okay, we know that. But we have a lot of selling, okay, up top that needs to make, in my opinion, a little bit more money. So I'm not comfortable 100% on a longer term price target above the 12 level right now. All right, not unless I saw something. So we just got good prints at 1150. We know we have prints at 15. We know we have great prints above it. I just feel they need to make their money lower first. And the reason I say that is because we have great buying up above, but when you have selling that comes in on a pull down, and that's what this is a pull down. Great buying, okay, tells us that the stock has to fall down first for them to build their position. So when we see selling coming in during a pull down like that, what that's telling us, it's going to go up a little bit first, but they want to ride that pull down. All right, so overall, I still feel it's got some room left towards that downside, but I would still be okay. And remember, I'm not a longer term trader whatsoever. I'll never pretend to be, because I'm not. But when we look at this coming in there, it really, underneath that 10, the amount of selling that we saw at that 11, I would expect, some type of trigger, especially around here at that 1150 now that we just got those prints, for us to be looking back towards that downside for a little bit before it ends up going back up. Next, other than that, actually, you know what? There's not really a next. Okay, so if we go over to SQ, I scanned before. There's just nothing going on out there. SQ is just kind of sitting there. It had actually a lot of selling at 97 that it never pulled up from. So I'm going to be expecting to come back up 20,000 shares. I know it's got great volume, but I don't see a lot more room. If anything, we're going to see something come out of nowhere, because as of right now, there's just nothing really out there that tells me anything. And AMD is just another perfect freaking example of what we were just talking about, is that AMD owes no one anything. We talked about this at 20. At 20, it was a great trade. At 25, it was a great trade. At 30, it was a great trade. So even though it's got to go above 35, it's in a consolidation right now. Look at this 30. It's consolidating here. They're building a big position. It doesn't owe anyone anything at this point. Look at the difference here. Look at 20. So when we broke above 20, guys, are we in a consolidation here as it broke above 20? Just look at our chart. Oh, there is an FOMC meeting. I thought we discussed this morning there wasn't. But either way, we'll look at it. So we come above 20, no consolidation. Okay, we're coming back up. I mean, you have a little bit, but I mean, it still was a smooth moving stock coming up to that 25. Broke above that 25. Beautiful trade. Okay, broke up to the 30. Beautiful trade. Now we're in a long consolidation. Until it breaks out of there, unless you're already in it, or unless you buy a lot of time. If a stock's in a consolidation and you don't buy a lot of time and you're taking an option play, it's not a smart move. You're giving yourself a very low probability. But if we do, so we do have, I'll go over Nike right now for you. So Nike is very interesting because it's coming back up to that 84 level. But if you look over here, okay, the 84, it's already filled in its gap. And the one thing that we do have is down here, see this big volume bar, this big volume? We have a Okay, we have a lot of prints that came in on the bid side of things at 82. So Nike overall, after it fills this gap, is looking like it wanted, well, not looking like it. The prints are telling us the selling at 82 is going to have to bring this thing back down. Okay, so right now it's an absolutely disgusting trade. I wouldn't trade it with your money, but at the same time, at this 82 level, we did get a whole bunch, a really nice burst of prints that shows us that the stock's going to be looking to come back underneath it. A lot of time being 3 weeks. Okay, so 3 weeks, okay, in a consolidation, who knows how long a consolidation here is going to take? Who here can look at a consolidation and say, okay, it's almost over, or this is what's going to happen? Now, you could use your volume pattern, which is one thing. Okay, so if we're coming in right now, and we'll go back down to AMD. So if we look at AMD right now, okay, so we have this big volume bar right here, beautiful. And now we're coming into a volume dip. Okay, so we know at some point in the future, AMD is going to get a very big volume spike that comes into it, and it's going to bring this thing back up above 35. Who here knows when that's going to happen? I'm all ears. I would love, for anyone who knows when that's actually going to happen. Jesus, and I 100% agree with you. Wait a minute, let me consult my crystal ball. But no one has any idea. So at that point, you got to make a judgment call. Is AMD going to break out of consolidation in 3 weeks? 3 weeks really? Is 3 weeks really a lot of time? One of the stocks I was talking about with somebody. Okay, if we look at Starbucks. Let's look at Starbucks daily chart for a second. Look at this. So if you look, imagine you were a shareholder in Starbucks. Okay, look how long this thing was consolidating for. And yeah, don't get me wrong, it made some decent moves, but I mean, you're talking about from the bottom of this consolidation right here at 52.50, give or take, and then the top being 62. Okay, is that really a lot of movement over this amount of time? So 3 weeks, in my opinion, it's not really a lot of time. Okay, if you want to take a stock in a consolidation, can you go wrong buying more time on a stock you know has to do something? Can you go wrong doing that? No. Absolutely not. Or you could buy shares and just hold it forever until it does what you want. That's also a stupid strategy. Okay, you want to do, and we talked about this yesterday, your trades, you want to come into your trades on stocks that are breaking out of these consolidations. Okay, and if you want to take a stock and try to guess when it's going to break below or above the consolidation, that's just what it is. It's a guess. No one really knows. Okay, anyone that tells you they do or they have a special indicator, I don't believe them. Okay, no one knows that tomorrow AMD is going to have a huge day. Could you make a guess because of the fact that there's news going to be coming out? Or for instance, if a stock's in consolidation and a stock's going into earnings, is it almost a guarantee the stock's going to break out of that consolidation when it has their earnings? So let's say AMD was going to have earnings tomorrow. Do you think it's a really high probability that AMD is going to break out of that consolidation? Yeah, there's no such thing as a guarantee, but it's a very high probability that AMD will break out of its consolidation because it has earnings. So if there's a catalyst that's coming, okay, you can make an educated guess on that, but it's still just that, an educated guess. You still don't really know. It's just more than likely. Well, it usually does the opposite. I'm not talking about direction. I'm just talking about up or down out of a consolidated chart. So if you're in consolidation, Tracy, you could have great earnings that go lower. You could have, that part I don't even want to get involved in. But at the same time, it's more than likely going to break up or down. All right, guys, we got any questions? I know I've went, Jesus, it's 2:10 already. We just did like a mini traders exchange. All right, guys, remember, I'm not here for specific times and stuff like that. Obviously, I value my time, but the reason I do, please learn from this. Okay, I don't want my, to spend this much time to go on deaf ears. Please, you need to pay attention. And I will post this on our Facebook, as soon as the recording's done. All right, I'll see everyone in the Traders Exchange. I just was reading Eddie's comment. I'll see everybody in the chat room.